Happy 2022, BiggerPockets fans. As we enter this brand new year, housing prices are at all-time highs. And this is unusual. Normally, housing prices peak in the summer and they cool down over the winter. But as you should expect these days, things are not what they normally are. And although housing prices have continued to go up, there are many market conditions that actually bode really well for prices to increase and for general real estate investing success in 2022. And those things are low interest rates, a national housing shortage, which is not going anywhere anytime soon, and very favorable demand demographics, which is also not going anywhere anytime soon. So although there are many things that point to housing prices continuing to go up, it, on the other hand, can also feel like a lot of markets have already popped, right? So over the last couple of weeks, I've been looking for markets that are more up and coming, more under the radar. And these markets that haven't yet exploded are what I'm going to share with you today. I've actually developed 5 under the radar markets that you should keep an eye on in 2022. And I actually have a free gift for all of you. Happy New Year. It is a spreadsheet with all the data that I'm going to talk about today. So you can go check that out on BiggerPockets.com. The link is in the description. It's a completely free download. What's going on, everyone? I'm Dave Meyer with BiggerPockets, and I am so excited to be back here at the beginning of a new year with all of you. This is a really exciting time of year as it's the time to set your sights on new goals and new accomplishments. And I hope you're all off to a great start with your 2022 goals, with those are personal or professional or investing wise. Hope it's going well for you so far. In terms of myself, just the other day, I actually posted my professional goals for 2022 on Instagram. And one of them that seemed to resonate with a lot of people was finding a new market to invest in. So why am I looking for new markets when I invest in Denver, which is a pretty great market? But the thing about Denver and a lot of the other markets out there is that they're mature. They're already well-known commodities. That means there's less risk, which is great, but maybe the upside is a little bit less than it used to be. So I'm trying to see if I can find a market that has maybe more upside over the next couple of years. And I think I found a couple pretty interesting ones. Of course, they're not sure things, but today what I'm going to show you is the 5 markets that I have identified that could have that long-term under the radar potential of a market that hasn't yet been discovered. But before we jump into these markets, I'm going to ask that you help me and BiggerPockets accomplish some of our 2022 goals. And those goals are to grow our YouTube and social media presence. So if you want to help me out, if you want to help BiggerPockets out, there are 3 things that you can do. First, give this video a like. It's pretty easy. Second, subscribe to the BiggerPockets YouTube channel. And third, please follow me on Instagram at The Data Deli. I know it sounds silly, but we really appreciate it. It helps us out a lot. All right, let's get into 5 housing markets that have huge breakout potential in 2022. In order to pick these 5 markets, I looked at a few key variables. So there are plenty of metrics, plenty of economic indicators that you can look at, but these are the ones that I thought were appropriate for doing a high-level screening of these markets. I looked at rent prices and rent growth, of course, appreciation, that is what home prices are now and where they have been over the last couple of years, population growth, one of my favorites, income growth, unemployment levels, and a couple of other ratios that I calculated using that data, which I'll talk about a little bit later. As we look at these markets, I want to remind you that which markets you actually wind up choosing is entirely up to you, the individual investor. You have to decide for yourself what risks you're willing to take, which metrics you care most about, and generally what your own investing philosophy is. And because these are smaller, relatively less known markets, it means that there is a higher risk than investing in well-established markets. You know, if these were airtight, no-brainer investments, they wouldn't be up and coming. They wouldn't be on this list. They would be well-established, but with this risk, with this increased risk of lesser known quantities, also comes greater upside. So just keep that in mind as we go through this list of potential investing markets in 2022. Remember, you can download all the data for these markets. Just follow the link in the description. And with no further caveats, the first market on this list, and again, these are in no particular order, so that's one more caveat. Our first market is Conroe, Texas. Conroe is a small city of about 90,000 residents, 40 miles north of Houston. And when looking at this data, I really like Conroe because it has a relatively low entry point. So if any of you are just getting started in real estate investing and don't have as many investable assets, this could be a good one for you. The median home price is $311,000. And I know that sounds crazy and it sounds expensive, but nationally, the median home price is now actually $370,000. So again, if you're looking for a relatively inexpensive market, Conroe might be the one for you. But of course, we care more about just the price point. We want to know about returns and return potential. So what I like in that regard with Conroe is that it has seen just huge population growth, growing 60% from 2010 to 2020. And it also has solid cash flow prospects. I want to explain something because when I say solid cash flow prospects, I'm talking about a rent to price ratio of just 0.57%. And I know there's going to be a lot of you out there who say that's not the 1% rule, and that is true. But let me explain two things. First, I am not advocating that you buy a deal at that ratio. What I'm saying is that the national rent to price ratio is just 0.48%. So anything above that, which Conroe is considered above average cash flow prospects for the country. The second thing that you need to take into account is that this is the average. By rule, that average means that there are deals that are both better and worse than the average. And if you have a market that averages 0.57%, like Conroe, there are going to be deals that produce much better cash flow than 0.57% RTP would indicate. It is your job to go find them. Go find a deal that has a 0.8, a 0.9, or even a 1% deal rule. And I should also mention that current day cash flow isn't everything. After all, cash flow, it's hard to find these days, but this list is about markets that have potential to take off. So if they're well-known cash flow places, they'd already be discovered. And what I like about Conroe, again, is that it has such large population growth in a booming metro area, Houston, and locking in a property now could mean excellent cash flow in just a few years. So that's our first market, Conroe, Texas, an inexpensive, up-and-coming city with huge population growth and decent cash flow potential today. Second on our list is Fort Myers, Florida, which has the best cash flow potential of any city on our list with a rent to price ratio of 0.76%. On a national scale, that is really, really good. And just for anyone who doesn't know anything about rent to price ratios, anything that's around 1% is generally really good. And a whole market that averages 0.76% is really good on a national scale. In a city that has an RTP that high, you should definitely be able to find cash flowing deals right now. And like Conroe, the median home price in Fort Myers remains below the national average at $312,000, and home prices have actually gone up 45% over the last 5 years. And I know 45% appreciation in 5 years sounds amazing, right? But it is actually the second lowest on our list. That is just the world we live in right now where appreciation is just going wild. Now, the big thing about Fort Myers that could hold it back is that rent has already exploded. It has grown more than 40% in 2021. And it now has a rent to income ratio of over 60%, which is way too high. If you're not familiar with rent to income, it's basically a ratio of how much money, how much of your salary the average renter puts towards rent. And normally you expect to see a rent to income ratio measure between 30 or 35%. That's usually pretty healthy. So seeing this over 60 means that rent, maybe it could come down, but more likely it's just not going to grow too much over the next couple of years because there's just only so much that renters can afford to pay for rent, and 60% is already way too high. So it's just a red flag about Fort Myers, but with solid cash flow today and property values likely to grow in the coming years, Fort Myers, very good place to keep an eye on. The third place on our list is Buckeye, Arizona, which is really just a generally well-rounded market. If you don't know this already, Phoenix is exploding. It is one of the most popular investing places in the country, and Buckeye is a suburb suburb of Phoenix with interesting fundamentals. Buckeye's median home price is about the national average at $400K. It's actually a little bit above it, but it's relatively close to the national average. And what I really like about Buckeye is 80% population growth between 2010 and 2020, which is not only the best on our list, but is best of almost any place in the entire country. And so much of the housing market and the rent market, for that matter, come down to simple supply and demand. And one of the best ways to measure and forecast demand is population growth. So if the population grows and demand grows, prices of both rent and homes are likely to go up. This means that there are really strong prospects for both rent and home price appreciation in the coming years, even though cash flow prospects today are only modest. But remember, real estate investing is about the long term. Fourth on our list, we have another city in Texas. Shocking, I know everything is in Texas, but Frisco, Texas is a northern suburb of Dallas, and to me, has the best potential for rent growth of any city on our list based on two primary factors. First, huge population growth, and I know that is a theme on this list, but if you're looking for places with huge growth potential, population growth is a really important factor to look at. Population of Frisco grew 71% from 2010 to 2020. And the second thing that I like that indicates Frisco could see good rent growth in the future is a low rent to income ratio. Remember, we just talked about Fort Myers having a high rent to income ratio. Well, Frisco is the opposite. It's actually 24%, which is well below what we would expect to see. And the reason it's so low is that the average income in Frisco is huge, with the median family income of $127,000, far and away the highest on our list and nearly double the national average of $66,000. So even though rent grew 25% in 2021, it's possible that rent could grow more in the coming years based off tons of people moving to Frisco and the relative affordability of rental units in that market. These are both really good indicators for rent growth. I should also mention that Frisco is a rather expensive market with the median home price of $593,000, so you'll have to pony up a lot to get into this market. Lastly, we have another expensive market, but one that I think could be the next Boise or Phoenix or Austin, and maybe not that big because it is a relatively small city, but I think it has huge potential, and that is Mount Pleasant, South Carolina. Mount Pleasant has a lot of indicators that suggest future growth. First, it has a minuscule unemployment rate of 1.8%. The others on our list have somewhere between 3 or 4%. And although those are all pretty low, 1.8% is extremely low. The second thing I like about it is that almost 64% of its population has a college degree, whereas the national average is just 37%. And this is the type of population that attracts employers and high-paying jobs, which are the things that drive appreciation and rent growth over the long term. And the third thing I really like is the rent to income is only 24%, which indicates future rent growth. And all of these indicators are really positive for Mount Pleasant, but there are a few downsides that I should mention. First is it's the most expensive market on our list. The median home price is $632,000. And frankly, the cash flow prospects right now are bad. It has an RTP of just 0.33%, and that is not very good. So finding something that cash flows could be pretty hard in Mount Pleasant right now, but it might offer huge cash flow and appreciation in the coming years for all the reasons I just said. With an RTI of just 24%, rent could really start growing and you could see really good cash flow in just a couple of years. So if you're interested in this market for long-term wealth building, finding something that breaks even or even has a modest 1 or 2% cash on cash return could be worthwhile for a long-term hold. All right, that's my list for under the radar markets of 2022. Remember, it's up to you to explore these markets or any other market before you invest. I look at this economic data to try and identify places that have great potential, but there is nothing certain and there is risk in real estate investing, just like with every other type of investing. With that said, thank you guys so much for joining me today. Remember, if you want to download the data from this list, you can do so for free on BiggerPockets.com. Just follow the link in the description. I'm Dave Meyer, and I'll see you all next week.